Wednesday, the 21st of August. Welcome to Business Morning. I am Bosin Amafaye. Let's get the one-hour show started here on Channels Television, Nigeria's news leader. The Securities and Exchange Commission is holding its quarterly Capital Markets Committee meeting in Lagos tomorrow, the Thursday, tracking the progress reports on Nigeria's capital market roadmap, or what you call the master plan agenda. All industry operators and professionals, as well as the head of securities exchanges, will be present. Ahead of that meeting, the SEC head of economic research, Dr. Afolabi Olowookere, is live here on Channels Television within the hour, speaking to us on the upcoming CMC meeting and the state of Nigeria's securities market. You don't want to miss that interview live here from our global headquarters. Meantime, Nigerian Bureau of Statistics missed its data releases calendar on Tuesday, failing to release the much-awaited capital importation report for the second quarter of 2019. So we're now focusing on the selected banking sector data report, which is due later this week, as well as the foreign trade in goods report. Those are two critical economic reports we're looking at for the rest of the week. And we have just about 3 days left. Meantime, food product giant Promasida, operating in 30 African countries, including Nigeria, on Tuesday, met the Ekiti State Governor and his team to further talks to restart the Ikun dairy farm for milk production and job creation. The Ekiti State Government says Tuesday's technical meeting with Promasida follows the initial deal which was sealed with the food company on behalf of the partners last month by Governor Kayode Fayemi. Professor of Economics and Chief Economist at Business Day, Dr. Nonso Obiliki, will be speaking today on Nigeria's food importation, FX ban, the tax revenue, among other top economic issues. Is live to us within the next couple of minutes from our Abuja studios. You don't want to miss that interview as well. Meantime, Nigeria's Council for Regulation of Engineering has asked all foreign engineering firms operating in the country to establish their design offices in the country. The latest directive on agencies amended act, which was recently signed on by President Buhari, is enlarging the agency's powers to include the granting of compulsory attestation to all expatriate quota for engineering practitioners. Current President Ali Rabiu says the agency is ready to transmit Nigerian engineering education system to outcome-based education as the council looks to attain provisional signatory status of the Washington Accord. And this is one big news. There was a record sell-off yesterday of Nigerian treasury bills, the highest we've seen since the FMDQ Securities Exchange was set up some 6 years ago. Yesterday, foreign portfolio investors sold off 2.48 trillion naira of Nigeria's treasury bills, and that's the highest single-day turnover in about 6 years. It's a big story that we're following. As you may have heard, foreign portfolios are selling off massively on Nigerian naira assets in recent weeks and months. A single trade of 2.24 trillion naira of 16.65 discount recorded on treasury bills maturing 31st of October was reported yesterday by FMDQ. We have quite a lot of this packed into today's and tomorrow on the show. You don't want to miss discussions drilling down on these stories. Let's get a sense of how we finished off yesterday. Temple Ashaju, business correspondent at the Nigerian Stock Exchange, is coming through with yesterday's trading day. The bulls had Monday. The bears chased away the bulls on Tuesday. We were 0.75% positive Monday. Then we lost about 0.2% on Tuesday. Where are we going from here, Temple? You have any idea? Good morning.
Well, I think investors will just, good morning, Bosin. Good morning, Bosin.
Yes, please go ahead.
Okay, so I think investors will just continue to take advantage of the low price that we're seeing in the market. Things haven't been too good. Yes, we know there's been overall weak sentiment in the market in recent times, which is not too good. But it's good for some smart investors, especially the retail folks who are buying these cheap stocks now mopping up the losses that we have in the market. But specifically, we saw some losses in the market yesterday, some 0.21% decline in the all share index. And of course, that means some kind of decline, of course, in the equity capitalization of the market. But if you look at the sectoral performance, things were really, really positive on that side of the market. And I'll get to that, the explanation for that briefly. But if you look at the activity level, it was negative yesterday. We saw a 16% decline in the volume of transactions and 22% decline in the value of the transactions that we have in the market as well. For top trades, investors have continued to take advantage of the Transcore PLC low share price in the market. It fell below £1, and some smart guys have been buying up that space. If you see, it drained yesterday some 10%, some 44 million units of its shares traded yesterday in the market at a value of 43 million naira. So yesterday we would have been positive, save for the sudden sell-off that we saw on MTN, and that's what is responsible for the decline that we saw on the benchmark indices. Some 2.4 million naira worth of transactions, 320 million naira worth of transactions actually, for some 2.4 million units of MTN was traded yesterday. That's 320 million naira eventually. But if you take a look at what it did on the other side, Dangote Cement on its own part recorded some 38 million naira. So some kind of exchange. And that's on the two heavyweights of the market yesterday. Dangote gained some 0.91%, and MTN had a loss of 4.40% in the market. You know that these are the two heavyweights that we have in the market, and that's how we arrived at the losses that we have yesterday. If you look at the energy stocks, nothing too much there. We saw a decline on Eternal PLC, and of course, Corn Oil PLC lost some 4.82%. But if you look at what O&O recorded, was a positive of 10%, pushing that share price up to some 3 naira 85 kobo. For the NASD OTC, which is the unlisted securities market, we saw no change. It's flat, just two deals there. Looks like that market is actually looking for some liquidity. For the fixed income space, bonds on its own part remained bearish yesterday all the way, even though we know that investors are just saving money for the auction that is about to take place today. Some 145 billion naira is to be offered today, where analysts are expecting yields to now clear to higher stop rates, given the rates that we've seen that are really high in recent times. For the treasury bill side of the market, we just got a correction now a few minutes ago that it's a bit of an error. The transaction for the 31st of October 2019 is actually 2.24 billion naira. It was just one deal, and it cleared at 14.65%. All other details remain correct. And if you look at the total transactions there, it's 2.48 billion naira. Total deals for that side of the market was 570. That secondary market actually experienced some kind of respite yesterday from the sell-off that it has been experiencing in the past few weeks. And that's how we arrived at this particular level, where we saw average yields closing at 9 basis points, Bosun.
Yes, Temple, thank you. We'll just try to track that data that you put out there as far as the FMDQ Securities Exchange place in terms of the treasury bills. That was a huge number in terms of that, but if that was we'll try to get that properly put out. But that was quite a very heavy numbers. If you ask me, that's quite a very huge one in terms of that trade. But we'll try to get that corrected or confirmed, as it were, with FMDQ very quickly within the hour to give us an insight into that 31st of October 2019 treasury transaction, that single deal, and what actually happened yesterday. Thank you, Temple. Checking in with you later on the show. So let's stick with the securities market and, of course, the quarterly meeting, what you call the CMC, the Capital Market Committee meeting, is taking place tomorrow, Thursday, the 22nd of August. So let's talk to the head of economic research at the Securities and Exchange Commission. Dr. Afolabi Olowookere is live here with us here at headquarters here in Lagos. Thank you. It's good to have you. Good morning. We appreciate your coming through. So let's get through. We apologize for that technical glitch there. But let's get the conversation going. The country's CMC, of course, the Capital Markets Committee meeting presided over or put together by the Securities and Exchange Commission holds tomorrow, Thursday. And it's always a very big gathering of everyone who is everyone at the marketplace. But let's get a sense of what to expect at tomorrow's meeting within the broader state of the market and the economy. The head of economic research at the SEC, Dr. Olowookere, is live here in the studio. He's also an economist. Good morning.
Good morning.
Let's get this conversation going. Give us a summary of the current state of Nigerian securities market.
As you know, I mean, I've heard you say that severally. You can have it from the primary side or from the secondary side. And from the primary side, it has to do with how many issuances do we have, how many equities do we have newly listed or newly issued, and how many bonds do we have, which can come from federal governments or states or, I mean, at the subnational level or from corporate side. And as you understand, we have quite a number of things happening with the federal government bond side in terms of the issuances. And recently, on the equity side, the big ones were the MTN and the Airtel that we were able to attract. So relatively, on the primary side, we've not really been doing badly. At least we've been able to move from a capitalization of about 11 trillion at a time to over 13 trillion. And we hope that that will improve with time. And with other new instruments coming to the market, you know that the primary market has a positive outlook, really. In terms of the secondary market, of course, whatever happened in the primary market was also for the secondary market for people to be able to trade on the secondary information on such things. So in terms of secondary market, we understand that lately, market has been coming down. We also understand that. But we knew that we were at minus 6% about 2 years ago, 42% in 2017, 2018 we did minus 17%. So we understand that we are coming from also a very high level. We cannot say really maybe like kind of correction, but it depends on a lot of things that will affect investor sentiment. Even amidst a falling trend, as Temple said, I was in the studio, you can still have investors taking advantage even in a down market. And there are investors who probably are foreign investors who may be having a kind of an outlook on the economy. They may exit, some of them may come. But market will always fluctuate. But what is very important to the market is that in a long term, do we have something that is going upward? I mean, the market capitalization that we have today is not what we had 5, 10, 20 years ago. The OSHI index, which started at 100, maybe in 1984 or something, is at 27,000. So in the long term, the market will see it as something that has a lot of potential.
Beyond the trading numbers, beyond the trading statistics, what is the state of the securities market from a regulatory overarching point of view?
Yeah. So for the regulator, you are very much interested in how many issuance comes to the market. You are interested in the regulation of the secondary market. You are interested in the efficiency of the market. You are interested also in the confidence that investors have in the market. In terms of new issuances, you understand that we had our rules on green bond recently. We are trying as much as possible to work on derivatives market. We are working on commodities market. So we have those ones from the regulatory point of view. We are also very much interested in the kind of confidence that investors have in the market, because that is very important for a regulator. You don't want to regulate a market where people don't trust what will happen, or they can lose their money, or if I buy, I may not be able to sell because of liquidity issue. So some of the initiative will be around how do we create liquidity in the market. Some of the initiative will be if investors have bought shares and they are unable to sell, how do you make sure that there is liquidity in the market? Some can say, okay, maybe we'll look at around margin lending. We can look at short selling. And on some of those initiatives, we are making a lot of headway. We are trying to engage with central. I mean, you understand this idea about margin loan kind of thing that we said, because banking stocks are not part of margin loans. Therefore, a lot of investors or a lot of capital market operators may not want to play in that market because banking stocks are the one that are most liquid anyway. So we are trying to also have a lot of engagement to see how you can attract liquidity into the market. And there is a committee on liquidity enhancement also, as part of the Capital Market Master Plan initiative, trying to see how you attract liquidity to the market. And that's, of course, you understand, once you have a liquid market, you have an efficient market, then you can have a good price discovery system.
This is a time. So aside this, will the recurrence or the reemergence of Ponzi schemes and all of that be part of the conversation tomorrow?
Definitely, we are always...
Because it's going to be a very busy day for you folks.
Yes, sir. Tomorrow, one interesting thing will happen tomorrow. There's a committee called FinTech Roadmap Committee, and they will be giving us a final report of the committee tomorrow. And of course, the FinTech committee is going to be looking at things around crowdfunding, look at things around cryptocurrency or distributed ledger technology, of course, the blockchain parts and quite a number of things, and the potential that they have in the market. They could look at the robo-advisory, they look at the RegTech issue and things like that. And the Ponzi scheme, because recently a lot of things can still be Ponzi around those areas also. Maybe because some may not really understand them properly and they can go into them, and some who understand can even exploit those who don't understand. Apart from those ones, there are still other traditional Ponzi scheme of bring money, I double your money for you. It's like an investment contract kind of thing. So those discussions will be had. We are going to discuss on how to move the market forward in those areas. And as you understand, we are working on the one in Kano, and we are trying to even standardize that process to make sure that investors are well aware. In that area also, financial literacy is very key. So one major thing that we are going to have tomorrow is the Financial Literacy Technical Committee coming forward to deliver. In fact, they've done quite a number of things in terms of even short video clips that will be distributed to people, so that you are able to understand what is the difference between a Ponzi scheme and a regulated investment as done by the Securities and Exchange Commission. And even on their website, you can still see names of regulated entities who are not likely to be involved in Ponzi scheme anyway. So investors are always told, please be on the lookout. Anything that looks too good
to be true,
it's
definitely
it can be poisonous. So,
it could be poisonous.
So you check on seconds.
We have a few more questions for you. Stand by after the break. We'll come back to you. Dr. Afolabi Olowookere, Head of Economic Research at the SEC, ahead of tomorrow's quarterly CMC meeting by the market regulator. Okay, let's get the conversation continuing with Dr. Afolabi Olowookere, who is an economist and head of economic research at the Securities and Exchange Commission, ahead of tomorrow's CMC meeting. Dr. Afolabi, thank you so much. Let's check in with you as far as the NCM roadmap or the master plan was concerned. Where are we on that?
The master plan, we are 5 years into it. I mean, almost 5 years into it.
This was a 10-year program?
Yes, a 10-year program.
So almost halfway?
Almost halfway. But the first thing we are working on now is to see how we can even look at some of the numbers, some of the assumptions that are there. So when
it was originally prepared?
Yes, because some of them might have changed. There are things that you were saying they were at a particular level, but they've changed. So you need to actually rejig the assumptions of the Capital Market Master Plan. So we have a small team in place now looking at how to assess what has happened so far in terms of what we've achieved, because once we've achieved something, you can then you can even shift the bar forward. So we are working on revising the Capital Market Master Plan currently. That notwithstanding, we are still implementing some of the initiatives in the Capital Master Plan. The commodity ecosystem is very key. We understand Nigeria is largely agriculture. I mean, we understand a lot of things are happening around food. We know a lot of things are happening around storage. We want to develop the commodity ecosystem. We also understand that farmers may probably need to even hedge a lot of things. So investors can even hedge whatever happens in the farming activity. So there must be a vibrant derivative market if you must do something around agriculture. And we understand that the capital market has to play a very major role in that area. So we have the commodity ecosystem report. We now have an implementation committee that's trying to implement that. That is a very major component of the Capital Market Master Plan. Another major component of the Capital Market Master Plan is our e-dividend. We have always been doing e-dividend, and we have to do that e-dividend because we don't want people to have invested in things and then for them not to be able to get their money back, because that can have a lot of implications on their confidence. But as you also understand, if people buy shares in different names that are not supposed to do, which we call multiple subscription. You are supposed to do one subscription, not multiple. But doing a lot of IPOs, quite a number of people bought shares in different names. And because of that, in this world of BVN and things like that, many of them cannot even retrieve some of those shares any longer. So one major thing that we are doing is this regularization of multiple shares, telling people, please come forward. If you have done some things in the past, come and regularize those shares. If you are able to regularize those shares, you can claim those shares. And once you claim the shares, you can claim the accrued dividend on those shares. And the dividend that will also be paid going forward. So those initiatives in the Capital Market Master Plan are very important. And the fintech that I just mentioned, we're also trying to see how to integrate the fintech into the next, into the revised Capital Market Master Plan. So quite a number of achievements we've had in the Capital Market Master Plan, but we are trying to even push those achievements forward.
Okay, quite a lot of things. I'm sure you guys, our CMC meeting is almost it's a whole day. It's a whole day event, hundreds and hundreds, even thousands of market operators, and everyone will be there. So thank you so much. We look forward to tomorrow's meeting. Then, of course, the usual briefing on Friday, giving us the details of what's going on there.